welcome to the Business Standard Morning Show. I'm Nazia Iqbal, and here's a look at the stories for the day. Just over 3 months after a helicopter went down in Arabian Sea near Bombay High, leaving 4 dead, another chopper carrying pilgrims crashed into the hills in Uttarakhand, killing 7 on board. Weather was adverse in both the cases, and pilots were also new to the machines. These 2 mishaps and some recent emergency landings, including the one involving UP CM Yogi Adityanath in June, raise one question. Is India's civil helicopter landscape being regulated efficiently? And what will be its future like as the government ramps up the infrastructure to give a leg up to the sector? Find out in this segment.
Just imagine the plight of the passengers on board this private helicopter, which made an uncontrolled hard landing on a snow-clad mountain base made for the Char Dham Yatra. In this May 31st incident, the helicopter tried to land and bounced, and then landed at the helipad of the Kedarnath temple. Aviation regulator, Directorate General of Civil Aviation, was quick to launch a probe. It also issued an operational advisory to all helicopter operators, demanding strict compliance with safety standards and warning of strict enforcement action against operators and personnel found responsible for such incidents. The regulator also said that a spot check would be conducted. It also said that all operators had to ensure that their pilots were sufficiently qualified. An audit followed, and 3 months later, in August, the DGCA imposed a fine of 5 lakh rupees each on 5 helicopter operators, which had been carrying tourists to the Kedarnath Dham for flight disturbances. It also suspended officials of 2 other operators for 3 months for violating safety rules. But just 2 months later, on this Tuesday, 7 people lost their lives when a helicopter ferrying pilgrims from the Kedarnath temple crashed into a hill amid poor visibility. The pilot, too, was among the dead. Reports have it that the ill-fated helicopter hit the base of a hill due to poor visibility. The DGCA has launched an investigation into the incident. According to reports, the owner of the helicopter, Aryan Aviation, was previously fined by the regulator for violating norms after a hard landing in May. Industry experts have told the media that Tuesday's helicopter crash and the fatal Pawan Hans accident near Bombay High in June have highlighted the gaps in standards. According to them, insufficient updates in training and familiarization were evident in both accidents, which involved senior pilots who had shifted to flying a new aircraft type only a short period of time before the crash. The pilots involved in these accidents had relatively little experience on the machines that crashed. For example, the pilot in Tuesday's crash had reportedly been an offshore pilot for close to 15 years and mostly flown multi-engine aircraft. He had joined Aryan Aviation only in September, just a month before the crash, and began flying a single-engine helicopter. Against this backdrop, one industry expert told the media that the crucial question was what kind of recurrent training had the pilot been provided to make him proficient in hill flying. Recurrent training refers to refresher courses that pilots must go through on a regular basis. For example, the Federal Aviation Administration of the US has specific regulations addressing the type, quantity, and frequency of recurrent training required for pilots and crew members. Data also points to an urgent need for a comprehensive training and standardization review. According to a report published on Statista on civil helicopter accidents in India between financial years 2006 and 2019, while loss of control was the most common cause of accidents, most of them were not fatal. Instead, loss of visual reference caused the most fatal accidents. A total of 47 accidents occurred in the 14 years, with 21 of them being fatal. Loss of visual reference is a situation in which the pilot has lost reference to the horizon or ground. Research by US aviation experts has found that it is either the pilot's decisions or lack of attention that is most commonly associated with such a condition occurring. Thus, they suggest that dealing with loss of visual reference needs to be a part of a pilot's ongoing training instead of being limited only to the initial training phase. Pilot decisions that are likely to cause such a condition include continuing operations in adverse weather. The Indian civil helicopter market is nascent. In fact, reports last year had indicated that it might even be diminishing in size. Helicopter operations in India are well below its potential, even as their requirement has been rising in areas like tourism, mining, corporate travel, and medical services. As of February last year, the total number of civil registered helicopters in India was around 250. Meanwhile, Brazil had around 1,250, Australia around 2,000, and the US more than 14,000. The government has been trying to remedy the situation. For example, Union Civil Aviation Minister Jyotiraditya Scindia recently revealed that the government was planning to establish helipads along new highways to allow immediate evacuations during emergencies. As such, it is important to find a comprehensive solution. For that, first, we need to identify where the gaps in the system exist. Is it a problem of insufficient regulations, or is it more about proper enforcement?
So the regulations are in place. The International Civil Aviation Organization Annex 6 is being followed. But actually, what is in practice needs to be seen. That is the safety oversight of the regulator and the self-regulation of the operator. How much power does the pilot have to say a no and continue with the job? So these are all very tricky issues. So that is when the DGCA needs to come in with the oversight. That oversight clearly is not there. Only a circular is issued by DGCA that we have taken action based on the investigation report. But is it enough?
So, are there any solutions at hand?
Organizations, they will fine only 5 lakh or 10 lakh. It's a very small amount for them. But DGCA is empowered to fine up to 1 crore as per the new bill in 2020. So 5 lakh for an operator is a measly amount. Penalty is supposed to be a deterrent, that in case you do another violation like this, a higher penalty or a cancellation of your permit could be the result of it. There have been accidents in the flying school areas where the investigator has written in the report that the basic purpose of the DGC audit post the accident was to resume the operations and not to fix the cause of the accident.
Statutory requirements regarding instructor qualification and helicopter pilot training are also inadequate compared to their fixed wing counterparts. This is an area calling for urgent attention. At the same time, experts point out that helicopter pilots go through significantly fewer hours of simulator training compared to their fixed wing counterparts, owing to a lack of infrastructure. This is a critical gap that needs to be plugged so that India's civil helicopter industry dreams can take off.
The government, with the help of private players, is trying to make helicopter rides affordable for everyone. But such a ride still remains a distant dream for a large section of the population. Two back-to-back reports from prominent international organizations have put figures to India's successes and shortcomings in the fight against poverty. A World Bank report said that the pandemic pushed 56 million Indians into poverty, while a UNDP report said that 415 million Indians were taken out of poverty between 2005-06 and 2019-20, a period of 15 years till the pandemic struck. Our next report offers insight into India's prolonged struggle against poverty and its byproduct like malnutrition. India has lifted 140 million people out of multi-dimensional poverty from 2015-16 to 2019-21, according to a report by the United Nations Development Programme. The report compares the above figure with a period between 2005-06 to 2015-16, when 275 million people were pulled out of poverty. In line with this, the incidence of poverty, the proportion of people who live in multidimensional poverty, fell from 55.1% in 2005-16 to 16.4% in 2019-21. The Multidimensional Poverty Index takes into account a wide range of parameters spanning health, education, and standard of living as against a poverty index by World Bank, which measures income level to gauge poverty levels. The UNDP report noted that about 16.4% of India's population live in poverty and about 4.2% of the population live in severe poverty, and about 18.7% of people are vulnerable to poverty. Unsurprisingly, the rural disparities are stark, as 21.2% people in rural areas are poor compared with just 5.5% in urban areas. Interestingly, India reduced poverty at a faster pace from 2015-16 to 2019-21, at an average rate of 11.9% a year, compared with 8.1% from 2005-2006 to 2015-2016. However, when the base poverty levels are lower, the relative poverty reduction is easier to achieve. The effects of COVID-19 pandemic on the poverty numbers cannot be assessed because nearly two-thirds of data from the 2019-2021 health survey for the country were collected before the pandemic. Going by the World Bank's measure of poverty by income, about 56 million Indians may have plunged into extreme poverty in 2020 as a result of the pandemic. The World Bank estimated extreme poverty based on a purchasing power parity of $2.15. Despite this, the UN report said the results are striking, showing a significant reduction in all 10 multidimensional poverty index deprivations among poor people. For instance, in health, the proportion of people who are deprived from nutrition fell from 44.3% in 2005-06 to 21.1% in 2015-16 to 11.8% in 2019-21. Similarly, in education, people who are deprived of certain years of schooling dropped from 11.6% in 2015-16 to 7.7% in 2019-21. Experts say it all depends on how you define multidimensional poverty to get a sense of whether India has fared better in the last few years. For instance, even though the number of certain years completed in school by children has improved over the years, as seen in the UNDP report, the quality of education still lags. According to a National Achievement Survey of 2021, there is an average learning level of 59% in grade 3, 42% in grade 8, and 36% in grade 10. This indicates a decline in learning levels with an increase in grade level. Further, the COVID-led schools closure must have worsened learning across the education system, along with erosion in gains in enrollment and school completion. According to the World Bank, 5 months of school closures due to COVID would result in an immediate loss of 0.6 years of schooling adjusted for quality, bringing the effective learning that a student can achieve down from 7.9 years to 7.3 years. Similarly, despite an improvement in child mortality from 2005, child stunting and wasting is still worse in India. According to the National Family Health Survey of 2019-21, the child wasting rate of children worsened from 15% in 2012-16 period to 19.3% in 2019-2021, and it is one of the highest in the world. Stunting is when a child's height is lower for the appropriate age, and wasting is when a child's weight is too low for the height. Let's hear from NC Saxena, former Secretary of Planning Commission.
If you look at the UNDP or Oxford definition, they give a lot of weightage to a number of years spent in school and the children's attendance there, not to quality of education. Similarly, they give importance to sanitation, water, and also physical infrastructure. So therefore, because of these factors, India has certainly done well, as I said, on physical infrastructure, supply of water, supply of sanitation, number of people using toilets has increased, roads have improved, electricity has improved, number of villages connected has improved, and these are all part of the Oxford indices. Plus, the schooling has improved. But as regards uh, uh, calorie intake, as regards nutrition, malnutrition with children, India has not done well. That is why the other international report on hunger shows India in very poor light.
Experts also say India has done well over the past few years in the physical infrastructure indicators captured in a UN report. Deprivations in sanitation, cooking fuel, and housing fell the most from 2015 2016 to 2019 2021.
Well, definitely India has done tangibly better in recent years. And most of it is due to the fact that some of the policy orientation has been better targeted. In other words, in those areas where poverty reduction is relatively faster, such as with reference to poorer areas, rural areas, poverty of children, female-headed households, and so on. In all of these cases, there has been a faster rate of reduction in these 5 years. Well, in both cases, our performance is satisfactory, but much ground is still to be covered. Because we have not, either in education or in health, we have not paid enough attention to some critical dimensions. In the case of education, for example, when we test these children in terms of their understanding, in-depth understanding of any subject, they often are found to be failing. In the case of health also, there is a lot of struggle at the poorer end of households.
Despite progress on some multidimensional poverty indicators in recent years, India still has by far the largest number of poor people at 228 million. The impact of COVID might have only worsened the scenario, and policymakers have their task cut out in eliminating poverty as a whole. India's ability to rein in poverty will determine its economic growth and a better per capita GDP. Moving on, equity markets across the globe underwent a roller coaster ride in the Samvat 2078. And as we enter Samvat 2079, analysts believe that the domestic market's outperformance against global peers will sustain with the improvement in fundamentals and profitability of Indian corporate. Our next report guides through what top brokerages are betting on this Samvat and the way ahead for markets.
Markets witnessed troughs and peaks of volatility in Samvat 2078. Liquidity reversal, policy tightening, the Russia-Ukraine geopolitical crisis, and rising inflation were the key triggers behind the volatility. While the first half of Samvat saw higher commodity prices of base metals and crude oil, a trend reversal was seen in the second half due to policy tightening and fears of slowdown in global growth. Both the policy indices Nifty 50 and S&P BSE Sensex shed up to 2% since last Diwali. However, they outperformed global peers such as the S&P 500 and the emerging market index, which bled up to 31%. Going ahead, analysts believe that the outperformance of domestic indices against global peers is sustainable in the long run.
The relative outperformance of Indian market will likely to sustain in Samvat 2079 as well, and would be led by favorable macroeconomic factors and better than historical fundamentals of Indian corporates. While inflation continues to be a major challenge in developed world, inflation in the domestic economy seems to be manageable. Good monsoon, higher reservoir levels, cool off in commodity prices, and healthy job labor market cumulatively indicates that domestic economy would accommodate the prevailing inflation rather smoothly. While the country's macro setup is positive, the fundamentals of Indian corporate have also improved. Profitability across the board has improved significantly. The cumulative and rolling net profit of NSE 500 universe for last 4 quarters till Q1 FY23 touched an all-time high level of 10 lakh crore, and loss-making sectors to have turned positive and contributed notability to the net profitability. Thus, in light of these positive attributes, we firmly believe that the outperformance of Indian equity seems sustainable in Samvat 2079.
Technical charts suggest that the Nifty 50 and the S&P BSE Sensex can reach all-time highs of 21,000 and 65,000 levels respectively during the next Samvat.
Indian equity markets are placed pretty well until the next Samvat. If not technically, at least we are going to see a consistent upside. BSE Sensex is heading towards 65,000, whereas Nifty is aiming 21,000 levels. On a short-term basis, support for the Sensex comes at 56,000 and thereafter at 52,000 levels. For Nifty, immediate support comes at 16,750 and thereafter at 16,000 levels. When talked about Nifty mid-cap and Nifty small-cap index, Nifty mid-cap index is placed really well on charts. The sustainability about 200 days moving average over 29,450 is indicating a positive rally in a medium-term perspective towards 35,000 level. However, Nifty small cap needs to take out the key resistance of 10,000 level, and only upon then it can rally to 11,500. For Nifty small cap index, the support comes at 9,000 levels. On a broad perspective, Indian equities are doing really well, and until next Samvat, we could definitely see a prosperous rally.
Against this backdrop, brokerage houses suggest stocks that investors should bet on to reignite their portfolio for Samvat 2079. Brokerage firm SBI Securities suggests investors to bet on HDFC Bank, ITC, Bank of Baroda, United Spirits, Sumitomo Chemicals and Whirlpool India for Samvat 2079 with upside potential in the range of 10 to 19%. IDBI Capital, on the other hand, advise investors to pick names like Kolte Patil, Mahindra CIE, Tata Power, Blue Dart with up to 35% upside potential. Likewise, Axis Securities and ICICI Direct too have suggested top picks for Samvat 2079. As regards today, quarterly results, rupee movement, crude prices and FII flows will dictate market trends. Besides, investors will closely track the Q2 report card of ITC, Bajaj Finance, Asian Paints, Axis Bank and Tata Consumer.
From markets, let's move on to banking. To ensure financial inclusion, banks are opening specialized branches for delivering digital banking products and services. These paperless branches are being called digital banking units or DBUs. Let's decode DBUs in our last segment.
Budget 2022, Finance Minister Nirmala Sitharaman announced that 75 digital banking units or DBUs would be set up to ensure that the benefits of digital banking reach every corner of the country. According to the Reserve Bank of India (RBI), a DBU is a specialized fixed point business unit or hub housing certain minimum digital infrastructure for delivering digital banking products and services, as well as servicing existing financial products and services digitally in both self-service and assisted mode. DBUs will provide several digital banking services to account holders. According to RBI, DBUs will enable customers to have cost-effective access and enhanced digital experience of such products and services in an efficient, paperless, secured and connected environment, with most services being available in self-service mode at any time all year round. While inaugurating 75 DBUs on October 16th, Prime Minister Modi said that DBUs simplify the banking procedure while providing a robust and secure banking system. Everything from sending money to taking loans will become easier. According to the RBI, the purpose of DBUs is to optimally blend digital infrastructure with the human touch. The banks should plan and implement remote or in-situ assisted mode arrangements in the right proportion. Karnataka, Tamil Nadu, Uttar Pradesh, Odisha and Rajasthan will get 4 DBUs each. They will be followed by Gujarat, Kerala, Madhya Pradesh, Maharashtra, Punjab, Sikkim and Telangana with 3 DBUs each. At 12, the State Bank of India has opened the highest number of DBUs. The Bank of Baroda follows it with 8 DBUs and the Union Bank of India has opened 6 units. Apart from the public sector banks, 2 private lenders, ICICI Bank and HDFC Bank, have also announced setting up DBUs. With banking services, the DBUs will also provide hands-on education on safe digital banking products and practices to the customers. DBUs will also offer grievance redressal services to the customers. Computers and the internet ushered in the new age of banking in India and the world. DBUs promise to take this a step further.
I will achieve, I will fly high. I am the SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
These digital banks offer far better digital solutions when compared to conventional banks with online and mobile banking facilities. Well, that's all we have for you today. We will be back with more news and analysis in our next episode. Stay tuned. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.